TV. I'm Sakshi Batra and this is Market Today, a show where we'll focus on the closing hour trends of the stock markets, the buzzing stocks and the sectors, and we'll also get you some expert views on the show. But let's first look at how the markets are trading at this point in time. Well, if you look at how the Sensex and the Nifty are doing, they're still down in trade, although off the lowest point of the day. The Nifty right now, if you see, is trading at 18,056, with just down about quarter points of us. So if you talk about the Sensex also, it's down at 62 points odd, 60,844 is the current level, but definitely the good part is that the 18,000 mark is still intact on the Nifty. Talking about the other broader trends, you are seeing some banks and financial space stocks really buzzing in trade despite the overall muted trend that you're looking at the markets. But other than that, if you see, there's some declining factors in sectors like autos, that's down in trade, infra is down in trade, but there you have it. Some of these stocks also from the banking space that are not doing too well. But the top Nifty 50 gainers, SBI, Titan, Bharti Airtel for you on your screens. UPL also up by 1.5% odd. Also, when you see HUL from the FMCG pack is buzzing in trade with over 1% gains at this moment. On the losing side, you do have ONGC, Tech Mahindra, Tata Consumer Products all down in trade about 2.5 to 7% odd. So some sharp declines coming in on that. Hindalco, Powergird and NTPC, the other declining stocks on the top Nifty 50 losing chart. Let's also welcome our guest for today. We have with us Mr. Mayuresh Joshi, who is the head of equity research for William O'Neill India. Welcome, Mayuresh, and thank you so much for taking the time out for this discussion. Well, in the recent days, what we have seen is that the Sensex has managed to hit 60K, then 61K, 18,000 after a long haul as well on the Nifty. Do you think that the worst is now priced in largely in terms of geopolitical concerns, the rate hikes, inflation, etc., even though we have seen the kind of reaction today after the Fed?
What has been announced on the Fed front, specifically when it...
Okay, Mayuresh, we'll just fix some technical issue. We are unable to hear you very clearly. We'll fix that up. But quickly, let's check how the markets are doing. Still down in trade, about 60 odd points for the Sensex, 60,844. The Nifty also holding up at that 18,000 mark. Okay, I think we do have Mayuresh back in action. Mayuresh, help us understand your view on the markets. How do you see the markets moving from here on?
Absolutely. Afternoon, Sakshi. I think two things happening. One on the global front, and all eyes were on the Fed and the actions taken out there. So I think line with expectations of the 75 billion that probably took place in terms of hike and the expected victory for the next quarters indicate rate hikes are going to come in thick and fast, less inflation. The same is the scenario with the European Central Bank because they're way behind the curve this point in time. This is creating havoc in terms of global currencies, and we've seen a lot of global currencies depreciate against the dollar. The rupee has been relatively better off in terms of the depreciation compared to the other currencies at this point of time. But I think the flow towards the dollar, in terms of the moment that you've probably seen in yields, more or less in terms of the 10-year being about 4.1, 4.12 odd percent, and the S&P earnings yield, which is very, very close to 5.5%. I think the bond markets and the kind of returns that they're generating, I think the kind of risk-free appetite that one can have and the minimization of the risk premium, I think that is what is creating jitterness in terms of equities. I think there has been a strong pullback globally along with our own Indian markets, but India has been resilient to a large extent. Now, earnings have held out relatively better off even in this quarter to come. Banks have posted a good set of numbers, in my opinion. IT sector was expected to remain a little bit under pressure and with expectations in terms of what might happen in terms of recession fear. That is playing out the way it was. I think domestic cyclicals, banks, and earnings holding, I think that shows the resilience for the Indian market. So I think I have a stock-specific approach for the markets, but I think Indian markets, which have outperformed the global peers,
Right.
because of all parameters, I think should continue their push.
Right. Also, Mayuresh, given the stance that the US Fed has taken, Indian markets today have still not reacted as bad as the global markets. Why do you think is that? And somewhere do you think the markets are underestimating the Fed's resolve to control inflation to bring down growth?
So I think what has typically happened, Sakshi, over the last few policy meets, I think around the day of the meet or before that, I think the markets do think or approach the meet with a very positive intent. But when I think the statements come out, and this statement was definitely hawkish, there were no two ways about it. every intention is probably to control inflation at this point. I think good move. I think jobs are robust in the US economy. Probably seen housing starts actually come down significantly, but I think the Fed wants to probably ensure that inflation comes under control. So I think the elections come a day or two after the announcements have been done. And let us remember that the markets, specifically the US markets, were very, very close to its 52-week close from where the rebound has happened. It's exactly the inverse for the Indian markets. I think we're almost close to our 52-week highs as we speak at this point of time. So I think the resilience and the outperformance stems from the fact I was saying in the opening remarks in terms of the strong fiscal resolve, the strong fiscal numbers that we've got. Will inflation concerns and slowdown hit exports? We'll definitely hit exports, and therefore I think the current account deficit will definitely be higher at this point of time. But I think the resilience and the resolve in terms of domestic consumption, I think that is what differentiates our economy compared to the others. So we will take a hit when it comes to exports. We will take a hit when it comes to the current account deficit as well. But it will not be as bad as the rest of the world and the emerging pack is concerned, and therefore I think the resilience for our market.
Okay, understood that. Also, Mayuresh, in terms of valuations, how would you rate India now versus the rest of the world? There has been so-called re-rating that we have seen, but how would you really look at markets in the context of overall valuation around the world?
So, Sakshi, I think the re-rating term is used, I think, interchangeably, but I think it does happen when there is a significant underlying change that happens when it comes to any theme, any sector, or companies belonging to that sector. Now, I think the change that we've seen is that 2 years of COVID hit corporate balance sheets pretty hard. So, I think when we are coming out of the COVID period, I think a year-on-year comparison will obviously look very, very rosy. But I think when you come on to an extended base in the next financial year and when you do forward valuations over the next 2 to 3 years, I think you'll be looking at a very expanded and a heavy base that corporates will need to work out. So I think on that front, we're probably looking at earnings improvement. I think that should be reasonable, and therefore that gestates the kind of forward numbers that we've got in terms of the current valuations. If you look at standard deviations on our market over the last 10, 20 years, we're definitely on the higher side of standard deviation. Valuations are
No.
absolutely not cheap. Therefore, having a stock-specific approach, staying with leaders, makes sense as per the overall methodology.
Okay, stock-specific approach is the right way to approach the markets right here. Mayuresh, be with us. I'm now joined by Chetan Bhutani, who's our reporter on the field and who's been getting us all those exclusives from the auto sector. Chetan Bhutani joins in. Chetan, what's really happening in the auto space right now? We did see the October sales come about where we saw passenger vehicle sales were definitely better off, perhaps signaling the worst may be over. But is that the trend that you're also picking up in terms of the trends that we are seeing?
Well, absolutely, Sakshi. It's been a bumper October for auto company, as you correctly pointed out. And is it the right time to say if the bad times are over for the auto industry? Well, there's a mixed views on that. Well, in fact, if I talk about the numbers, among the four-wheelers, Maruti Suzuki, India's largest car manufacturer, led the charge with about 21% growth in the sales over the last year. But the largest auto company in the country sold more than about 1.67 lakh units. Hyundai sales were about at 48,000 units, while Tata Motors posted a healthy growth of about 33% with 45,423 units. Well, earlier I also caught up with Shashank Srivastava, Senior Executive Director at Maruti Suzuki, and this is what he said about possible new SUV launch in this fiscal, and of course how the company is growing up at the shortage and of course trying to clear its backlog. Listen in.
Just mentioned about more SUV coming up in this financial year. Can we expect that in the January to March quarter?
Exact timing is difficult for me to reveal, but yes, you have only 5 months remaining, and therefore we would like to introduce these some of the SUVs quickly. And remember, Chetan, we had this long discussion last time that is also central to our regaining the market share, because in the non-SUV market, while our market share is upwards of 65%, it is because we have a smaller market share in SUV that brings down the overall market share to below 50%. So we would like to achieve that 50% number. That has been a stated objective, and SUVs form an important part of that strategy.
Shashank, last two questions. How is the sales for Grand Vitara going, and are you considering to ask the government on any tax breaks for strong hybrids? Because ultimately the government is offering some relief for EV. Strong hybrids also are a cleaner source of energy. So any comment on that?
Yeah, so the Grand Vitara has been doing quite well. We have so far got more than 76,000 bookings, and we have delivered almost 13,000 cars. So that's a pretty good beginning, I would say, even though there have been some constraints in terms of availability. Yes, hybrids are a very, very good option. Grand Vitara strong hybrid gives the intelligent electric vehicle gives it almost a 28 kilometers to the liter, and therefore very, very environment friendly. And it runs on the EV mode in the urban cycle most of the time. So and it doesn't have that range anxiety or the charging infrastructure requirement. So I'm sure it's very, very good for the environment. And in that sense, I think it's logical that some support be given to the strong hybrids as far as taxation is concerned.
Okay, Mayuresh, you heard Shashank Srivastava also talk about how bullish they are in terms of the SUVs coming back and, the focus increasing in terms of Maruti, focusing on the newer SUVs. They will be bringing those in the next 3 to 4 months. Overall, how do you see the auto sector really panning out? Just like what I asked Chetan also, do you believe that the worst is over, the supply chain issues, the semiconductor issues, or are they still going to be an overhang? It is going to be a slow progress going forward from here. And how does one really approach the auto sector now?
So I think to look at it, I think I'll divide it into 4 parts and very quickly move on that. I think one on the commercial vehicle space, I think has held up pretty well. With the kind of capital spending that is expected on the government front, along with private capex expected to come back strongly over the next few quarters, commercial vehicles, both MHCVs and LCVs, should continue their good performance, specifically in terms of volume-led growth and expectations in terms of price pass-throughs that they've probably done in terms of input cost inflation. So I think stocks like Ashok Leyland should continue their momentum, in my opinion. When it comes to the PV side of the business, I think Maruti has given a very strong set of numbers, M&M as well. And generally, I think with the festive season, what we've seen is kind of demand acceleration that has happened towards four-wheelers, towards SUVs. And generally, I think demand coming in from tier 1, tier 2 cities, the distribution network improving vastly. And as you rightly pointed out, a lot of semiconductor issues now getting resolved. There is still some pain, but I think over a period of time, I think the kind of order flows that they've got and the backlogs that they've got, they should be comfortable in the next few quarters. So I think Maruti M&M look nicely placed as those wheels that are launched. On the two-wheelers, rural demand, how it pans out is a very important aspect.
Yes.
If discretionary spending comes off, you're probably expected to see some element of concerns for stocks like Hero, which you got a large rural exposure as well. Within that, TVS is probably held out when it comes to both volumes, top line growth, and margin maintenance as well. New models expected from both the PV and the two-wheelers when it comes to electric vehicles. And therefore, the capital spending will be high and elevated. But generally, I think numbers will be better for the leaders within this pack. You should not also forget, Sakshi, the auto ancillary space, because a lot of players are grinding their way towards the PV transition. And therefore, I think as these new capacities come up for the new players, auto ancillaries will be the first beneficiaries of these entire cycles. So I think auto ancillaries should also be kept.
Okay, understood that. Mayuresh, stay with us. I'm also going to go across to Tanya Aneja, and she has all the updates from the IPO space. We do see that the primary markets are buzzing yet again, one after the other. We are seeing more and more IPOs opening up for subscription. We already had one that closed with sharp subscriptions, DCX Systems. We do have Fusion, then Bikaji Foods, and also Global Health today opening for subscription. Tanya, tell us, what has been the response so far?
Absolutely, Sakshi. So according to the latest data available on the Bombay Stock Exchange, the IPO of Fusion Microfinance was subscribed 21%. The IPO of Global Health, which operates the Medanta chain of hospitals, was subscribed 21% as well on the very first day of bidding, while Bikaji Foods was subscribed 41%. So all the three IPOs have received subscribe ratings from brokerages, but experts do prefer Bikaji Foods among the three. They also see better chances of listing gains in the case of this snack maker. However, they do believe that the IPO valuations are expensive, but they have a subscribe rating on this issue due to Bikaji's better revenue and profit growth than its peers over the last 2 years. In the case of Global Health, they believe that the low occupancy rate is a concern, but overall, it is a decent candidate and could deliver well in the long term. In the case of Fusion Microfinance, financial ratios are solid and the overall fundamentals are good. But there are industry-related concerns. They also believe that this issue is only for investors with a high-risk appetite with a long-term view. Back to you.
Thank you, Tanya, for all those updates. Mayuresh, from the IPO space, is there something that's interesting, looking interesting to you at this point in time? Is that a space that investors should keep an eye out on?
I think I love the namkeen and the sweets that we make. Actually, but I'll really wait for the listing to come through, because I think on the premises that our research probably works on, I think the O'Neill methodology basically works on stocks having some price action as well. So therefore, I think we wait for listing to come through for all these various stocks, and then we'll probably take.
Okay, understood. But from the secondary market, we talked about the auto space. Which are the other sectors that are looking promising to you as we head into the new calendar year as well? Which are the sectors that will perhaps outperform the markets?
Absolutely, I think, and the entire focus looking at the global backdrop in terms of recessionary fear, so on and so forth. I think the domestic themes is something that might continue to do well and better than the export-oriented counterparts. With that in lieu, my entire thesis or our thesis has been more in terms of capital goods. I think this space will continue doing well. With the general elections almost a year and 9 months out, I think the kind of spending that will come through, whether it comes to rural, urban, housing, whether it comes to infrastructure, whether it comes to ports and roads, I think it's going to be an exponential spend that the government will do. And looking at the fiscal deficit at this point of time for this financial year, the government will go all out because it's just 38-40% for the first 6 months. Exponential spending expected to come through. So I think capital good players will definitely be in focus. Second will be defense and railway companies as well. There's a kind of focus that the government has on both these sectors as well. I think exponential orders can probably come through for these two segments as well. And for providing finance, I think finance is the backbone, Sakshi. You cannot overthink banks. I think the financial banks, the larger one, private or public, will remain in focus on any pullback that probably comes.
Yeah, but out of those, the hot debate on ICICI Bank versus HDFC Bank, where do you stand at?
So HDFC has been a clear underperformer. I think there is value, but I think we'll go in terms of the reported numbers. ICICI Bank definitely looks very, very attractive. 936 is the key pivot on the O'Neill lens. So I think if it crosses that, I think a huge momentum can get expected. So if you want me to make a choice, I think ICICI is something that our belief is that the momentum might continue compared to it.
Okay. Also, just last question to you, Mayuresh. We have been seeing that the FIIs seem to be coming back into action. I want to understand from you, are they getting ready to load up to India? If yes, then what would it really mean for the markets overall in the new year?
So as I said, I think they cannot ignore India. So at some point of time, they have started coming back. You've seen the positive numbers over the last few days. I think the entire perspective here is that India probably seems to be far better placed on a lot of counts. We already discussed that. And when it comes to the emerging pack and the allocations thereof, Vietnam is very strongly placed when it comes to export-oriented mechanisms as well. But it's a very small market. And therefore, I think if you need to put substantial amount of money, I think India is something that is there. China probably has its own set of concerns at this point of time. And so does Brazil. I think the elections just got over in Brazil at this point of time. And Russia probably remains a big question mark in terms of allocations as well. So I think the allocations are coming thick and fast towards India. Over the next year or so, whether those readjustment will happen, God knows, but you cannot ignore India. Therefore, I think the FII flows should continue in whatever proportion, but Indian markets cannot get ignored.
Okay, understood that. Well, thank you so much, Mayuresh, for being with us and sharing all those wonderful insights about the stock markets and helping all our viewers really understand which is the way to approach the markets as we step into the last part of this year and into the new calendar year. Thank you very much. It's been a pleasure speaking with you, as is always. Let's now quickly get back to how the markets are trading at this point in time. We're just a couple of minutes away from the closing of today. 18,047 for the Nifty at this point in time, down about 0.2% odd. Talk about the Sensex as well. That's down 100 odd points at this point in time. 60,808. Perhaps we are going to be ending the day in the red. And, when we talk about the other sectors, apart from, say, the autos, IT and the metal stocks. Rest, all of the sectors have managed to pull themselves back into the green. There's slight losses definitely coming in on the IT pack. That's the one that's going home with the maximum losses today. The Nifty IT is down by over 1% odd. Talk about the auto space as well. That's down 0.5% in trade. The metals are down by 0.2%. But what's gaining strength despite this overall very, very choppy and a volatile trading session, we are seeing that the PSU banks that have risen and sharply and are taking home with the maximum gains in today's trading session. The Nifty PSU Bank Index is up by 2.4%, 2.5% odd at this point in time. Also, of course, the financial services are just flat, but the private banks are also taking some gains home, 0.3% odd or so. When we talk about the other sectors, you have realty that's up by 0.5% odd in today's trading session. The pharma stocks are absolutely flat with just slight indications of positives coming right there. The FMCG stocks are just about 0.25% up as well. In terms of the top gainers, well, the Nifty has a whole host of names that are coming in on the top charts. When you talk about Shree Cement, for example, is now as the top gainer on the Nifty as well. SBI Titan and Bajaj Auto also gaining strength in today's trading session. Apart from this, you do have M&M Finance. That's a sharp move that we've seen today. 13% uptick after that Q2 earnings. And apart from this, you have some of these other Nifty 500 gainers as well on your screens too. PNB, say 5.6% up. Again, from that PSU basket, you're seeing the PSU banks, a sharp move on the upside right there as well. On the losing side, when you talk about the 500 Nifty stocks losers, you have NHPC, Nykaa, Tata Motors, DVR. There's a wide difference between the DVR and Tata Motors stocks. So that's something that you need to keep an eye out on. If you have both the stocks in your portfolios, you'll see that wide difference coming about. TCI Express, Relaxo Footwear, that stock you should keep on your radar. 4.4% down take after those Q2 numbers, the weak set of numbers that have come about. The stock definitely saw some pressure coming in. Sumitomo Chemicals, another stock from the chemicals and fertilizer space, down by over 4% odd in today's trading session as well. But overall, the Nifty goes home with about 0.2% lower, 112 points of a cut on the Sensex as well. You can see that, very, very choppy session is what we witnessed through the day. The first half was largely to pull back from those opening lows. The second half was just to manage above those low point of the day as well. But we do go home in the red as we close the day's trading session. But we'll definitely keep you posted with everything that's buzzing on the street in terms of news from the world of business and stock markets and everything that you need to know about what is the right strategy for you to invest into this current stock market scenario as well. With that, we wrap up this edition. Many thanks for tuning in, but do stay tuned on to Business Today TV for a whole lot more.